Hi everyone and welcome to this YouTube channel. In this video, you're going to talk about why banks and countries hate crypto. Please subscribe and type subscribe in the comment section below. It's no secret that many governments around the world dislike Bitcoin. While some countries like El Salvador have embraced Bitcoin and made it a legal tender, others are looking to regulate it. For instance, China has even gone further to a crackdown. It has also implemented a ban on this virtual currency, meaning people can trade Bitcoin legally in the country. Bitcoin and crimes. Bitcoin is decentralized, meaning no single authority or entity can control it. Blockchain creates a public ledger with transaction history or details. However, this database doesn't have personally identifying information, meaning tracing the parties in a Bitcoin transaction in the real world is not a straightforward process. Ideally, Bitcoin provides the anonymity that criminals can use to engage in illegal activities. What's more, some individuals have lost significant amounts of funds to cybercriminals through crypto exchange hacking. Drug mafias have also used this anonymity to trade harmful chemicals and drugs. Also, some people argue that terrorist organizations have received payment for weapons on the Bitcoin network. Nevertheless, some of these problems are possible to avoid. For instance, you can avoid losing money when trading Bitcoin by researching the crypto exchange you use. If you decide to use Bitcoin Era, for example, take the time to investigate it. That way, you will know what to expect once you register and start trading Bitcoin on this platform. Decentralization. Bitcoin's decentralization is a primary concern for many governments. Ideally, governments control conventional currencies like euros, yuan, and dollars because they are centralized. And this control allows governments to change monetary policies and run the economy the way they desire. Tracking money. Movement in the economy enables governments to collect taxes and profits from the traditional financial systems. Conventional money control enables governments to track fraudulent or criminal activities that involve cash. Thus, governments can influence the economy by creating monetary policies and fostering financial transactions. Bitcoin's decentralization means the government will lose this control if people embrace it. That's because the underlying blockchain technology doesn't allow a central authority to control this virtual currency or regulate its movement. But that's why Satoshi Nakamoto created this digital currency. Bitcoin's primary role was to enhance anonymity and individuals' freedom to control their finances. Bitcoin's newness as a concept. Bitcoin presents a new concept. Its value is not stable, making its use in daily transactions difficult. Perhaps that's why some governments are yet to consider or embrace Bitcoin as a financial system. What's more, even some individuals don't trust the Bitcoin concept. Whether Bitcoin will become a global currency is a matter of time. Nevertheless, some people have become millionaires through Bitcoin trading and investing. Thus, early adopters are likely to benefit from this virtual currency than those who wait to see how things turn out. What's more, countries like El Salvador have become early adopters, making Bitcoin a legal tender. Central banks' business and fiscal treatment. Central banks enable governments worldwide to control their country's economies and finances. If Bitcoin becomes a mainstream currency, central banks will lose their primary role. Eventually, this will also be a loss for the governments. Therefore, central banks and governments dislike Bitcoin. Also, Bitcoin operates via a decentralized network on the blockchain. And this makes planning tax regulations and monetary policy hard for the government. Thus, governments fear that tax treatment will be complex if Bitcoin becomes a mainstream currency. Final thoughts? Bitcoin seems like a threat to conventional money and governments because they could lose economic control if the world embraces this digital currency. However, this cryptocurrency's adoption grows while governments try to control it. How things turn out will be a matter of time, as Bitcoin is almost impossible to regulate for a central authority like a government. As we head into the winter months, it seems highly improbable that China would be able to reopen its economy in any meaningful or sustainable way without triggering a more widespread outbreak of COVID infections. Notwithstanding that, Houston quipped that investors were piling in a classic case of FOMO, or the fear of missing out. Further reports that China is also looking at relaxing restrictions around flight suspensions which penalize airlines that brought COVID cases into the country have also boosted airlines, as well as Rolls-Royce shares in their third quarter numbers. Yesterday, Rolls-Royce blamed lower than expected large engine flying hours of 65% on the various COVID disruptions causing problems with air travel in the Asia region. A return to normal in Asia markets would be enormously helpful for Rolls-Royce as it navigates its way back to some form of normality. In economic news, non-farm payrolls in the United States continued growing more quickly than expected last month, with the Labor Department reporting a seasonally adjusted rise in payrolls of 261,000 during October. Economists have penciled in a much lower rise of about 200,000. October's increase compared to revised increases of 292,000 and 315,000 in August and September, for a combined upwards revision for those months of 31,000. Average hourly earnings increased at a month-on-month pace of 0.4%, beating expectations for 0.3%, while the rate of unemployment rose by 0.2 of a percentage point to 3.7%, above the 3.5% reading that was previously anticipated. On home shores, construction activity in the UK continued to grow in October, but new orders fell for the first time in more than 2 years. Commercial building was the best-performing category, with output growth reaching a 5-month high. Meanwhile, residential work also expanded, albeit at a softer pace than in September, but civil engineering activity fell for the 4th month in a row. The new orders index declined to 49.4 in October from 50.1 the month before, coming in below 50.0 for the first time since May 2020, and suggesting that rising borrowing costs could be starting to impact demand. Construction output has staged in modest recovery after the downturn seen through much of this summer, with growth hitting a 5-month high in October, said Tim Moore, economics director at S&P Global Market Intelligence. However, the forward-looking survey indicators highlight that growth will be harder to achieve in the coming months as rising borrowing costs. Economic uncertainty and cost constraints all had a negative influence on order books in October. The reduction in total new work was the first since May 2020, and this fueled increased concerns about longer-term tender opportunities. Elsewhere, new car registrations improved slightly in October, with total registrations rising from 106,300 in 2021 to 134,300 in 2022. According to the Society of Motor Manufacturers and Traders, SMMT, private new car registrations totaled 62,700 in October, above the 58,400 print a year ago, but below October 2018's 69,200. The SMMT said October's increase likely reflected a partial recovery in real incomes due to the government's energy bill support scheme and cost of living grants. Please subscribe, like, and hit the notification bell to receive more of this awesome content as it is released. Thanks for watching.